Hello students, myself Parashuram. I am Assistant Professor in Commerce working in Government First Grade College Golasangi. Dear students, in this video I am going to explain about financial analysis and interpretation. Before we proceed with financial analysis and interpretation, let us have an example so that we can easily understand what is analysis and interpretation. So financial analysis and interpretation of financial statement. So what is, you know that financial statements are the statements which are prepared by the business concern at the end of financial year. And there are two types of financial statements. One is profit and loss account, another one balance sheet. So we need to understand what is analysis and what is interpretation. Uh, for the example of, for the sake of understanding what is analysis and interpretation, I have taken the data of a particular company from 2019 and 20 of sales, cost of goods sold, and gross profit. In the year 2019 and 2020, sales are 1 lakh and 1 lakh 20,000. Cost of goods sold 70,000 and 80,000. Gross profit 30,000 and 40,000. So here I have calculated the difference here. So 1 lakh 20,000 minus 1 lakh 20,000 it is difference. Then 10,000, 30,000, 10,000. The percentage increase in sales, cost of goods sold, and gross profit I have calculated. Sales have increased by 20%. Cost of goods sold has increased by 14.28%, and gross profit has increased by 33.33%. So this way of studying the relationship, studying the data is called as financial analysis. So this part is called as financial analysis. So what you have done here, you are just studying the financial data. But how we are going to study the financial data, whether it is increased or decreased, and you are going to calculate the percentage. So this part is called as financial analysis. So interpretation. Then coming to what is the interpretation? Interpretation, here I have written sales have increased by 20%, cost of goods sold has increased by 14.28%, and gross profit has increased by 33.33%. Hence, the company has good profitability position. So the increase in cost of goods sold but is less than the increase in sales. As a result of that, the gross profit has increased by 33.33%. So this part we call it as financial interpretation. So I hope you have understood what is financial analysis and financial interpretation and financial statements. Now with this background, let us move on to the presentation. Let me start the presentation now from the beginning. This is the syllabus of Rani Chennamma University, Belgavi, the second chapter under the management accounting subject. So in the management accounting subject, the second chapter is financial analysis and interpretation. We are having syllabus in this way. So for the purpose of study, I have classified the content into 11 sessions, starting from session 11 to session 21. In this video, I'm going to cover first three sessions, session 11, 12, and 13. So after the completion of each session here, we are going to have certain multiple choice questions. You know that the multiple choice questions will be followed by four options. You have to choose the right answer. So the first meaning and definitions of financial analysis. Let us begin now. So the subject is management accounting for BCom 5th semester students of Rani Chennamma University, Belgavi. The students shall be able to know meaning and definition of financial analysis. Let us have look at the meaning of financial analysis now. Analysis of financial statement is a study of relationships among different components of financial activities of a business enterprise disclosed in financial statements. So the financial analysis is nothing but it is the study of relationships among different components of financial activities. Activities, I mean to say whether it is sales activity, purchase activity, isn't it? Cost activity, any type of activity, we are going to study the relationship between or among different components of financial activities of a business enterprise, the which are disclosed in financial statements. You know that the information regarding the financial activities will be disclosed in financial statements of a business enterprise. Then financial analysis means to make a critical examination of accounting information given in financial statements. So under the financial analysis, we are going to make a critical examination of accounting information given in the financial statements. The definitions of financial analysis, which we look at. The first definition is Metcalfe and Titard defines analyzing financial statement is a process of evaluating the relationship between component parts of financial statement to obtain a better understanding of a firm's position and performance. So financial analysis is nothing but is the process of evaluating the relationship between financial statement to obtain a better understanding of business firm's business performance and the position as defined by Metcalfe and Titard. Then coming to the second definition given by John N. Myre, financial statement analysis is largely a study of relationships among the various financial factors in a business as disclosed by a single set of statements and set of these factors as shown in a series of statements. Again, he says that it's a financial statement analysis is a largely a study of relationships among the various financial factors in a business as disclosed by a single set of statements and study of these factors as shown in a series of statements. So as I told, after the end of the session, we will be having multiple choice questions. The first question is a critical examination of accounting information given in the financial statements can be termed as ratio analysis, financial analysis, cash flow analysis, working capital analysis. Can you tell me the answer? Yes, it is financial analysis. So critical examination of accounting information is nothing but financial analysis. The answer is financial analysis. Next one, a financial analysis is a study of relationship among different components of financial activities disclosed in financial statements, cost sheet, cash flow statements, none of the above. So we get the information from which statement? In the beginning only I told you, we get the information for doing financial analysis from the financial statements. The right answer is financial statements. Coming to the next session, 12th one, under the management accounting, Anichalma University, Belagavi. The students shall be able to know the meaning of interpretation, differences between financial analysis and interpretation, and its objectives precisely. So, in this session, we are going to talk about, I'm going to explain about the interpretation, meaning of interpretation, the difference between financial analysis and interpretation, and its objectives. So what is interpretation? Interpretation means to explain the meaning and significance of the financial data in a simplified manner. So interpretation is nothing but we are going to explain the meaning and significance of the financial data given in the financial statements of a business concern. Then the definition in the words of F. Wood, analysis and interpretation of financial statements are an attempt to determine the significance and meaning of financial data. So again he says that it is analysis and interpretation, I think it is an attempt to determine the significance and meaning of the financial data. Coming to the difference between financial analysis and interpretation. On the one side, we are having financial analysis on the left hand side. On the right hand side, we are having interpretation. So let me tell you the first thing. Financial analysis is followed by financial interpretation. What it means? First, we do the financial analysis and then we go for financial interpretation. In the example only I told you, first we have made the calculations, nothing but is a financial analysis. Then we have defined, we have described the analyzed information. So it is nothing but interpretation. So analysis comes first, thereafter comes interpretation. Okay, then let us start with the difference. The first difference between financial analysis and interpretation is analysis means methodical classification of data in the given in the financial statement. So the data given in the financial statement is methodically classified under the financial analysis. So interpretation means explaining meaning and importance in simplified manner. The second difference to helps it helps to know which one the financial analysis helps to know the profitability and financial position of the business concern. So this analysis will help us to understand the profitability and financial position of the business concern. In the example only I told you the profitability of the business concern is good. So it helps to then interpretation is it helps to know the past progress to assess the present and future prospects. So on the basis of the past performances of the business, we can predict future and present and future prospects of the business. So that is nothing but the interpretation. Coming to the third difference, uh, analysis, financial analysis, it draws the conclusions. So the financial analysis will draw the conclusion, whereas the interpretation helps to explain the conclusions. Coming to the fourth difference, financial analysis without interpretation is of no use. So when you make the financial analysis, we have to do the interpretation. So without interpret, if you don't do the interpretation, analysis it is of no use. Then interpretation without analysis is not possible. I told you the financial analysis first, then financial interpretation is next. So without financial analysis, we cannot perform interpretation. So interpretation without analysis is not possible. Coming to the fifth difference, various tools and techniques like ratio analysis, trend analysis, fund flow, and cash flow statements are used in case of financial analysis. But in case of interpretation, there are no such tools and techniques used. Coming to the fifth one, coming to the sixth difference, it is the prior activity to be done before interpretation. So before the financial interpretation, we perform financial analysis. Then interpretation, it can be made only after analysis of data. Coming to the last difference between financial analysis and interpretation, while preparing financial statement, accountant uses different forms of analysis. I told you ratio analysis, trend analysis, fund flow analysis, and cash flow analysis. Different forms of analysis are used. Comparative analysis are also there. Common size analysis are also there. We shall study those things later on. Then analysis analyzed in statements are used for explanation. So that is difference between the financial analysis and interpretation. So these are the differences. Coming to the objectives of financial analysis, to assess the present and future earning capacity of the business. So by financial analysis and interpretation, we can assess the present and future earning capacity of the business. So the financial analysis and interpretation is carried out with the objective of assessing the present and future earning capacity of the business. Then to estimate the future possibilities of the business. So we can easily estimate the future possibilities of the business, whether the company will be going to be successful or it is going to be unsuccessful. So with the help of financial analysis and interpretation, we can predict it. Then coming to the next objective, to examine the efficiency of the management. So the management efficiency can be easily examined and assessed through financial analysis and interpretation. Coming to the next objective, to assess the financial performance of the concern. So with the help of financial analysis and interpretation, we can easily assess the financial performance of the concern. That is also the objective of financial analysis. Then to assess the borrowing capacity of a business concern. To assess the borrowing capacity also, the objective is also the objective of financial analysis. Coming to the multiple choice questions, uh, explaining the meaning and importance of financial data is called. What is the mean? When you explain the meaning and importance of financial data, it is called as explanation, interpretation, analysis, or classification. Can you tell me the answer? The answer is interpretation. Next one, DAS helps to know the profitability and financial position of the concern. So whether it is a financial analysis helps to know the profitability and financial position of the concern, or interpretation, cash flow statement or funds flow statement. It is financial analysis. Next question is objectives of financial analysis are to assess the borrowing capacity, to examine efficiency of the management, to know the trend of the business, or all of the above. What is the answer? It is all of the above. Last one, the term financial analysis and interpretation in management accounting are both are same, both are different, none of the above, all of the above. Can you tell me the answer? Yes, it is. They are different. Financial analysis is different, financial interpretation is different. So the answer is B, both are different. Next one, the 13th session of management accounting under the financial analysis and interpretation of Rani Chennamma University, Belagavi. The students shall be able to know different types of financial analysis and its applications. The types of financial analysis we are going to discuss now. So the financial analysis is classified on different bases. So on the first base for classifying the financial analysis is on the basis of materials used. The first classification under the materials used is external analysis. So what is external analysis? So whenever the financial statements, the published financial statements of a business concern are used by outside people of the business for the purpose of financial analysis, it becomes external analysis. So this type of analysis is made by the outsiders like investors, government agencies, bank and research scholars by using the printed and published financial statements. So the next one, internal analysis. Whenever the information is the whenever insiders do financial analysis with the help of books of accounts and with the help of internal records of the business, it becomes internal analysis. It is the analysis made by internal parties like employees or members of the BOD, that is the board of directors, who have access to the books of accounts and the internal records of the business, that is internal analysis. So on the basis of materials used, we can classify the analysis, financial analysis, into external analysis and internal analysis. Next one, on the basis of objectives, we can classify the financial analysis into short-term objective, short-term analysis and long-term analysis. So the first one, short-term analysis, this analysis is made to determine the short period solvency position of the business concern. So this analysis involves analysis of current assets and current liabilities. So whenever the with the objective of assessing the short-term knowing the short-term position of a business concern, for example, liquidity position of the business concern, if you make the financial analysis, it becomes short-term analysis. Then long-term analysis, this analysis is made to determine the long-term solvency position and financial stability of the business. So this analysis helps the management to prepare long-term financial plans. So whenever the analysis is made with the long-term objective, long-term solvency, assessing the long-term solvency position of the business concern, it becomes the long-term analysis. Next one, on the basis of method of operation, we can classify the financial analysis into vertical analysis and horizontal analysis. So vertical analysis, you know that vertical line and horizontal line. Vertical line, when you make analysis of data of a single year, it becomes vertical analysis. So vertical analysis refers to the study of relationship of various items in financial statements of one accounting period. Then horizontal analysis is nothing but analyzing the data of more than 1 year. So it refers to the comparison of financial data of a company for several years. So this type of analysis is based on the data from year to year rather than a single year. Next one, coming to the multiple choice questions, an analysis, financial analysis made by outsiders about the company is called internal analysis, external analysis, vertical analysis, or long-term analysis. Can you tell me the answer? Yes. An analysis, financial analysis made by the outsiders about the company is called external analysis. Next one, short-term analysis is used to determine dash, whether it is liquidity position, solvency position, profitability position, or financial position. It is liquidity position. So whenever the objective is to analyze the liquidity position, it becomes short-term analysis. Next one, comparison of financial data of a company for several years is done through internal analysis, external analysis, horizontal analysis, and vertical analysis. So can you tell me the answer? Answer is comparison of financial data for several years. It is horizontal analysis. So this is the end of my lecture. We shall meet in the next lecture. Until that, goodbye to all. Wish you have a good day. Thank you. Thanks for watching. Thank you one and all.